Sunday, May 2nd, 2021, Monaco 64, home of alternative economics and contrarian views. Billy is fine. He's upstairs. It's fairly early right now, so I decided to make a video this Sunday. I am making my live stream tonight. We will be on at 9 p.m. London. But yesterday I didn't make a video. I posted the All-Star Silver panel where we spoke about the silver squeeze. And that's what I want to speak a little bit about. Because I think there's a lot of misunderstanding, and it's mostly coming from the mainstream media, from people like Jeff Christian, from institutions like Kitco maybe, and even from viewers. They think that the Wall Street silver movement or even the gold squeeze movement, which I've been advocating for many years, not just silver. I've been advocating for people to buy physical gold and silver. I've even had this mug designed for probably about 2, maybe 3 years, and it says only physical gold and silver will slay the bullion banks. This mug here, of which I'm drinking my coffee from this morning. So to me, this movement of trying to get as much physical out of the market, it's not like Wall Street Bets or GameStop, where you're trying to make millions from a trade to squeeze the stock. This is about revealing the fraudulent nature of gold futures, the over-the-counter market of ETFs as well, and the fact that all these products are basically there to manipulate the gold and silver market. And why is it so important to manipulate gold and silver? I mean, historically, Fed chairmen or chairwomen, they ignore gold when they're asked about gold. They say, well, yeah, we look at it sometimes. But I think that's just like economical with the truth. They are very worried about gold and silver as well. Silver is probably even more important, even though it's considered gold's how can I say, inferior. I think silver is just as important. I think silver, yes, is part of the scheme as well, and that's why the bullion banks always maintain huge short positions in gold and silver. We are told, of course, by people like Jeff Christian that this is not true, but we've just heard from the former director of the United States Mint. He was director there for 5 years, who said that COMEX gold is leveraged at least 60 or even 85 to 1. So we've seen that COMEX is there, and the gold futures contract was started back in just a day before the beginning of 1975 in order to create like a market where there would be volatility, a market that wouldn't be a physical market. We've seen the WikiLeaks documents from 1974 saying that basically the purpose of derivatives is to keep the American public and the general public around the world away from physical gold, because if we drain the official sector, the bullion banks, of physical gold and silver, the system will implode because gold and silver are money, as JP Morgan said. They've been money for 6,000 years. And why would these banks and central banks keep gold if it's not that important, right? But yes, the gold market is about 10 trillion in market cap, as Mr. Moy from the Mint said. And he doesn't think it can be squeezed, but I think he's wrong, because the 10 trillion or $11 trillion that gold is worth is all the gold ever mined and above ground. And a lot of that gold will never see the light of the day. It's in vaults, it's in Indian temples, it's held by Indian wives, or it's not going to be traded around the world in the markets. And the official amount of gold, central bank gold or sovereign gold, of which the bullion banks are involved with, is only about 17% of that 10 trillion. So it's not that hard, I would say, to try to squeeze. And by squeezing, I mean draining these people of physical gold and silver. And plus the fact that they're probably leveraged even more than what Mr. Moy said, about 60 to 85 to 1. I would say it could be even more, 100 to 1. So I want to go over what Jim Sinclair said, not only about gold, and I would add silver as well, as a revealer of true wealth. And that's why they are determined to keep the movement quiet, our movement quiet. Have you seen anything about silver squeeze or even maybe a gold squeeze in the mainstream media? No, they won't touch the subject because it's so important to them to keep people away from physical gold. They denigrate people like us. They call us gold bugs, conspiracy theorists, because they don't want people going and actually doing the right thing, getting out of paper. They've only been able to keep this fiat currency system going because they've been able to control the physical gold and silver market. So that's what it's about. Yes, people who have gold and silver, physical gold and silver, will benefit when this system implodes. But it's not our fault. The fault is of this system that's been corrupted, I would say, since the Federal Reserve was created, but also the acceleration started, of course, in 1971 when Nixon basically put the world on a non-monetary system. That's what John Exter called it, a non-monetary system. I owe you nothing. I mean, if you gave someone a promissory note for nothing, do you think they would take it? But we have to take it. So that's what it's all about. So for all those people there who say we're doing a disservice to people by trying to squeeze or drain the bullion banks of physical silver and gold, think again. It's something completely different. Yes, some people will get in this movement just to make a fiat currency profit. And I would say that is wrong, but I can't legislate for everybody's intention. So let's go first to page 70 of A Pocketbook of Gold, a survival manual for monetary mayhem by James E. Sinclair and Peter D. Carlin. This book was written in 2009, so it's very prescient. So gold is a revealer of falsely stated wealth. So you see, if the gold and silver market start behaving like they should, going up 2, 5, 10% a day, then it's a barometer of trouble in the monetary system. That's why gold and silver is so controlled. Do you ever see gold go up more than 2% a day? Very rarely. So when wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. The depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic management as well as the mismanagement of the affairs of state. So yeah, managing your economy is not just the country's economy, it's your own private economy. You must make sure you run a proper household, you have a proper budget, and that you don't create deficits every month as an individual. So that's why, yes, the gold and silver squeeze, or silver and gold squeeze, is more than just making a quick buck. It's about a way of living frugally and having a proper economy as well. Of course, the national economy, governments, they have ruined that. They've gone off course many, many decades. That's the Keynesian philosophy. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate, equities, affluence. As expenses run out of control, Guarantees to the citizenry also explode. Well, for that, read stimulus checks, deficit spending, national debt going through the roof, as politicians seek to retain the privilege of office. And the other thing, they need to keep the fiat currency, the paper dollar, with a semblance of value, especially now that I think a third of all the currency created has been created in the last 14 months or so. And you can't have gold and silver going up too quickly or the currency dropping too quickly. But I don't think they could succeed, because if they did, that would mean that the whole of history that we've seen, the history of fiat currencies, will have been basically negated, because, Zimbabwe would probably be the richest country in the world. Weimar Germany would still be around. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which one bought certain things no longer does, but wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e. debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. Sounds familiar? Government passes on the mismanagement of economic affairs to its citizens by devaluation, as imprisoned money manager Martin Armstrong has artfully stated. And I quote, "The decline in the value of a currency is in reality a free market tax, taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. The corresponding rise in gold, especially when it is a global phenomenon." Yeah, and we've had that since 2001. I've spoken about that many times. I even wrote an article about that in 2007, way before I started this channel, when I was still working in the city, about how all fiat currencies are sinking versus gold, and they continue to do so. So as Jim Sinclair says here, it's a restatement of wealth on a global scale, and it's going to continue. And that's why you need to have physical gold and physical silver. Not only will it protect your wealth, the hard-earned wealth that you've been able to save, the surplus activity that you've turned into a monetary asset, but it will also serve to expose the fraudulent nature of the fiat currency stated wealth. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. So all the monetary policy that we've seen from all the major central banks, that's what it is. It's this race to the bottom. It's zero interest rates, negative interest rates, endless QE, yield curve control. Central banks nowadays, they don't, how can I say, tighten policy anymore. They're uber doves. There's no such thing as a hawk. Central bank hawks have gone extinct. Falsely stated and assumed wealth, largely created out of the assumption of debts that can not be borne, must eventually reset at a lower level. Populations bear that restatement of wealth through the expansion of monetary aggregates. Well, M1, M2, they're even hiding it now. They're not even publishing it every week. And they are like calculating it differently, giving you an average, because people like me and others were starting to scrutinize it week by week, causing a devaluing of the national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. So there you go. That's what it's all about. The silver squeeze and the gold squeeze movement is to basically show the world that the current system is not real. And it will only happen when we see a rebalancing of the scales. Right now, paper, fiat currency is here, gold and silver are here. It has to be rebalanced. And I think it's actually going to go through the rebalancing, because that's what happens when you manipulate things for decades. When you have the rebalance, it overshoots, it goes boom, and then eventually it balances out. And that's why you need to have physical gold and silver, because it's not going to be smooth. It's not going to be just like that. It's going to be like that. And then when it goes like that, that's when you're going to have, you won't be able to get gold and silver. And then when the system reboots, yeah, you won't benefit from it. So let's look at what Jim Sinclair and Peter Carlin actually had to say about ETFs. And in here they talk about GLD, because this is in 2009 they wrote this, and GLD was quite popular then. I think it had been around for about 4 or 5 years. So what is a gold ETF? So Gold Etf Characteristics, this is what they say. And this is why I've never really gotten into ETFs, because I read this book many years ago, and I know that it's what it's all about, so to speak. Number 1, create the illusion of gold ownership. 2, stack gold custodians on top of, at times, unnamed sub-custodians, creating an opaque ownership and obligation chain. Well, think of all the bullion banks, the sub-custodians, right? Are highly susceptible to counterparty risk. That's number 3. Number 4, give only limited recourse in the event of mismanagement, fraud, loss, and theft. 5, are by nature illiquid in a crisis. 6, do not accurately reflect at all times the price of the underlying they claim to represent. 7, cannot redeem for physical gold, and I would add silver, in small amounts, and usually not at all. Of all the paper vehicles for owning gold, the most popular for the retail investor is the Gold Exchange Traded Fund, or ETF. On the surface, gold ETFs look great. You can trade them on a registered exchange. Liquidity looks solid. Sometimes you can buy and sell options on the underlying, and there is the promise of gold behind the underlying security. But all of these factors, which appear to enhance the attractiveness of owning gold ETFs, ultimately, under further scrutiny, become reasons for concern. So this is what's happening now is not a surprise to Jim Sinclair, and it's not to me either, because I read his warnings back in 2009. ETFs seem a natural choice for the retail customer who wants to invest a fixed small amount of money and cannot meet the financial requirements of margin trading on the comex. The fact that an ETF carries the trademark of a registered exchange, like the London Stock Exchange or New York Stock Exchange, would appear on the surface to enhance the reputation and reliability of the security, but in truth it doesn't. In fact, there are limitations to your rights as an owner of ETF that set it apart from other long-established financial instruments. So I'll stop here about that. You've seen probably that a lot of the holdings in SLV and GLD are dropping a lot, despite the fact that, for example, the gold price has been going up, and silver has remained pretty steady to higher. And that's a good sign. It means that hopefully retail investors are waking up, getting out of these synthetic or ETF products and buying the real physical silver and gold. And that would be great because that's not what they want. The central bankers, the bullion banks, and even the World Gold Council. World Gold Council was the sponsor behind GLD. They're not a friend of the small investor, the World Gold Council, even though I have to admit they provide a lot of good information. They're a pawn of the central banks, and they push people into synthetic and ETFs. So yeah, don't listen to the World Gold Council. And Jeff Christian of CPM, he's allied to these people because he admits he works for the big banks, the bullion banks. He admits he works for governments and international organizations, which is probably the IMF, the BIS. So he's not a friend of the retail investor, even though he's coming out now and saying that he expects gold and silver to go up. I guess he's just trying to get on the right side of the trade. But he will never tell people to go out there and start buying physical. He talks as if we will have no impact on the market by continuing to squeeze the market of physical. And of course, yesterday was the silver raid, the 1st of May. Will the price of silver go through the roof tonight when COMEX opens? I don't know. I can't forecast that. I think it will take more than just a few months of accumulating physical silver. We just have to keep going and keep waking people up. Yes. And again, the price is not that important. The importance, for me at least, is to wake people up to the fraudulent nature of our non-monetary system, our I owe you nothing monetary system. As a former central banker, John Exter called it back in 1972. So that's what it's all about. So yeah, we are David and we are fighting Goliath, but we're only going to beat Goliath through physical. Yeah, trading paper, holding paper will just give more and more strength to Goliath, and it will keep us down. So there you go. Yeah, I will be doing my live stream later on tonight. I'll see you at 9 p.m. London. I wish you all a nice rest of the weekend, and I'll talk to you later. Take care. Bye.